Hi, my name is Doug Baker, head of the Preferred Securities sector team for Nuveen Asset Management. Today I'd like to give you an update on the preferred security asset class. What I can say is over the past 6 to 12 months, no news has been good news. The fundamentals remain strong and the technicals continue to move in our favor. So let's start with the fundamentals. We're going to focus on banks because banks are our largest sector in the preferred security market. For most indices, banks account for close to 75% of the outstanding issuance. Bank balance sheets continue to improve. This is the result of regulation like Basel III, dodd-frank. Today, banks hold more common equity capital on their balance sheet than they have at any time since the 1940s. As a preferred investor, what's important to us as a preferred security investor is the amount of common equity capital on a bank's balance sheet. Common equity sits below us on the balance sheet to protect us from losses and impairments. So today, as a preferred security investor, you have to go back 75 years to find the last time this much common equity sat below us on the balance sheet. In addition to the balance sheet, let's look at what regulations have done to the bank business model. It has greatly reduced risk. So from a preferred security investor standpoint, we are investing in firms whose business model is much less risky today than it was for decades leading up to the financial crisis. Now, people are often concerned about rising interest rates and what rising interest rates mean for fixed income securities. It is also important to consider what rising interest rates mean to the business model of our issuers. Arguably, for the bank sector, rising interest rates are incredibly positive. Many would argue actually that the bank sector is the sector that benefits the most from a rising interest rate environment. Now we also move on to technicals. Technicals have been something we've been talking about in the preferred space for quite some time, specifically the supply-demand technical over the next few years. Not many people know this, but banks are actually limited as to the amount of preferreds that they can issue and count towards their Tier 1 capital requirements. For those that don't know, really the only reason why banks issue preferreds is because they count as regulatory capital. Now, over the past several years, since the financial crisis, the banks have been aggressively raising capital. And now, here in the U.S., our U.S. banks are almost near that limit of preferred securities that can be counted towards their Tier 1 capital calculations. So what does that mean to us as preferred investors today? Well, it means that the likelihood of significant new supply coming to market is very low. As a result, demand for the securities that we already own should likely increase due to scarcity over the next couple years. So in summary, for the preferred market, it's not just an asset class that provides our investors attractive income, but the fundamentals continue to be strong, and in addition, the technicals continue to move in favor of the preferred security investor. Now, here at Nuveen Asset Management, there are two things that we are concerned about when we look at preferred securities. First, the sector concentration of financial services, and second, interest rate risk. Now, we just talked about how strong the fundamentals and the technicals are for the asset class, and fundamentals, especially today, might actually argue for having an overweight to banks and to other companies within the financial services sector. However, whenever we have this much concentration to one particular sector, we advise investors to limit their overall exposure within a diversified portfolio. Now, moving on to interest rate risk, how do we manage that? Well, here at Nuveen, we favor securities that have adjustable rate coupons. You may have heard of fixed to floating rate preferreds, floating rate preferreds, or fixed to fixed preferred securities. Now we can get into the details later about what each one of those securities looks like, but from our perspective, what's really important is that those structures have adjustable rate coupons. And adjustable rate coupons or resettable coupons help lower your duration profile within an overall strategy. So all else equal, compared to a preferred security with a traditional fixed rate coupon for life, having a structure with some sort of resettable coupon will help lower your duration today and help mitigate your duration extension risks down the road. So for investors that are concerned about a rising interest rate environment, we at Nuveen believe that there are security structures that can help manage that risk for our investors. So in summary, we just want to tell our investors or potential investors that we think the fundamentals are strong for the asset class, the technicals continue to move in favor of preferred security investors, and for the two key risks within the asset class, we feel there are very effective ways for managers to work around that risk and to mitigate the impact of those risks to our end investors. Thank you.